the rest of the world was thinking they had an advantage on the US. In one change of administration, all of a sudden, the US is leapfrog rest of world. Now, rest of world is going, holy cow, Brett, like what's happening there? Tell me, what's happening with institutions? Is it true that, JP Morgan is really doing JP Morgan deposits on Base? Is that really happening? Did that? Yes. Yes, it did really happen. The ripple effect of it internationally has been super pronounced.
What's going on, guys? Today we got a great episode with Brett Tejpaul. He is the Co-CEO of the institutional business at Coinbase, and we dive into all the things that you probably want to hear from Coinbase in terms of institutional adoption. We talk about what they're thinking around Bitcoin, around altcoins, around tokenized securities, on-chain assets. What are they going to do when all of the TradFi firms start coming into the crypto industry? How is he thinking about all of the different market developments, both in crypto and out of crypto? And then we even talk about things like digital asset treasuries, and we also start talking a little bit as to where are the risks, where are the opportunities for Coinbase as they move forward, all that and more in my latest conversation with Brett Tejpaul. All right, Brett, I thought a good place to start the conversation. Coinbase is like the king of crypto. You guys are the most well-known brand in definitely in America, probably globally. You also happen to be a publicly traded U.S. company, and you sit at the intersection of the crypto world and the traditional financial world. You have clients that are consumer crypto, and you have legacy finance firms. And in a weird way, you guys are building an institutional business that should be bigger than the consumer business over time, just given the pools of capital that you can go over there. How do you guys balance, right? There's kind of crypto native is like a whole different ballgame than the institutional world, but Coinbase seems to be balancing that. So how are you guys doing it?
What a warm introduction. Thank you.
Yeah, of course.
That's a nice start to an interview. We have built a pretty amazing institutional business. It's grown. The client demands have expanded from just, wanting to buy and store and trade and finance and all those things. And, as we look forward with the regulatory backdrop that we now have with the Genius Act, it's really easy to start to think about a world and put into action things that will allow the true disruption of the financial landscape. And so I think you're teeing up the topic of tokenization as being on the horizon, and actually not really on the horizon. We've already done, a few things. And so that probably is the thing that begins to build the bridge between the crypto native world and the traditional finance world. In terms of your specific question on how to balance it, really, we've been laser focused on getting the first part right before we try and do the other stuff. So when I first came to Coinbase, 5.5 years ago, we really only had one thing, and that was custody. I mean, and by the way, when I'm talking about the institutional business, not the consumer business. We were like 99.9% a retail company. And so we had to break and rebuild and build for the first time the entire platform that you see today. So we couldn't begin to contemplate other things before we got, the native crypto thing right. So that means, qualified custody, which you know all about, smart order routing, building the prime function, all sorts of financing products, staking products, making sure the exchanges, we had the right footprint for both spot and perps. International came a little late for us, arguably, but we're now really expanding our reach there. So it was only at the point where we had, and nothing's ever complete, but like a very fulsome set of products where institutions were like, okay, I can do all the things I want to do. And actually, thinking about it, and this is direct feedback from clients, they're like, hey, you've built something that feels like what I do with stocks or bonds, right? It's a similar experience in terms of how I deal, how I trade. And that's the moment where we go, okay, like what else can we do? What is it you want to do? And that's why now it's more like client demand is saying, "Whoa, this is like better, faster, quicker, more secure. Why don't we think about doing other things?" And we've seen announcements from other firms about tokenizing stocks and tokenizing credit funds, which we've already done. And I'm very excited about that future. So it's really the way Coinbase works is we're laser focused on delivering products and having a steady stream. We can't do all things to all people. So now it is the appropriate time to think about what's next.
So let's go maybe sector by sector, and you just kind of tell me what the institutions are doing. Bitcoin, I would think a lot of them start there, but there's ETFs that are available. What are you seeing in terms of the institutional demand for Bitcoin going spot, versus maybe some of the other tools that they could use?
Yeah, Bitcoin's a gateway. It's consistent with your view. Once we have now, let's say 5 years of client footprints and patterns. And it's fair to say that Bitcoin is absolutely a gateway. Once you do that, you're likely to own ETH and then progressively, other things. More importantly for us, you're likely to elect to do more products with Coinbase. So buy, source, sell, finance, do different things. And so if you build a product platform, the idea is that a singular client will choose to consume multiple products. And so what we've seen there is an expansion of their activities into owning more things, but then also recently in the past couple of years, a desire for non-US clients to be able to trade in non-US places like our perp index and index, and so and perps. And so we're seeing a very steady expansion of clients from overseas beginning to trade on Intex. The Deribit acquisition was huge for us. So that's a great demonstration of the progressive activity that institutions do. So first spot, then sort of normal futures and financings in there as well, and now options. And so options was probably the last big piece of the puzzle that we needed to solve for, and Deribit provided an accelerated path to the go-to-market.
When you get into maybe the altcoin space outside of Bitcoin, so still, crypto assets as people would think about it, maybe like the top 50 or top 100 on a coin market cap. What is the institutional demand for those compared to maybe a Bitcoin?
Well, as an overall statement, it waxes and wanes. Where it's steady is in the people that have been early. So the whole venture community, the private sort of high net worth communities, consistent demand. The prosumer, what we call the prosumers, are the active traders that are trading on our Intex, is our acronym for our Bermudian perp exchange, and so we see a lot of activity there. I would say for the more TradFi hedge funds that dip their toe in the water, trade a little bit of Bitcoin, maybe a little bit of ETH, maybe more in the context of an inflation play, a store of value. They've been at times going out a little further, thinking about, Avalanche, Solana, other tokens. They don't extend too far. Mm-hmm. So I would say when
top 5, maybe top 10.
Top 5, top 10. We've been asked we have the Coin 50. Mm-hmm. So the Coin 50 is, as it sounds, a market weighted index, and we've seen demand for that. So people want, particularly those that are late. So if you're an institution that wasn't already long Bitcoin, you're going into this. I can't tell you how many hedge fund guys would say, like, I'm a great trader in TradFi, but I missed Bitcoin. I'm never going to miss the next thing. Mm-hmm. Getting long the Coin 50 through our asset management business is a great way to do that. So I would say that intersection of TradFi guys going, extending out with the venture guys that are always in it is kind of what we see. And then the X factor, if you like, are the systematic funds. The systematic funds are coming in. They are coming in size, but they really need to trade 40 things, not 2 things, not 10 things, and they need consistent borrow. So what we've built now with our Prime offering allows them the ability to have constantly on demand a borrow, ability to go long and short. They can do that on perp exchanges. They can do it in spot. And so I'm hoping that embedding that community, that systematic trading community, comes in size, and we get more pronounced activity in tokens. Right now, what's filling the void, I know it's a long answer, but what I like about the DATs, you haven't gone there yet, but I think you're going to. The DATs are, I think, a new path, an easy path, like you mentioned, ETFs, but it's a new way for capital to come into tokens that aren't Bitcoin and ETH. And so that's an interesting play too.
Let's talk about tokenized securities. We've seen lots of announcements from companies. It feels to me like we're still pretty early in these things being tokenized themselves, like just like the asset actually existing. And then the markets seem pretty thin in terms of liquidity, but it's been growing. And I think the belief is that as larger players come in, some of the market makers and stuff, you'll get that liquidity. Are you seeing a lot of demand for that right now from the institutions?
It's kind of crazy. We have, we're in this phase now, just setting the context of why it's kind of crazy. So the context is that the Genius Act passed. And so now stablecoins are part of the framework. So that has been a giant catalyst. It's not really the price action on Bitcoin that got people to reconsider the marketplace. It was actually the passing of the Genius Act and what's to come on market structure. So now that that's like part of the mainstream economy, everyone's going, okay, like, this crypto thing is really going to disrupt financial services. How? And if you're a behemoth like, as an example, not a specific one, but JP Morgan, Bank of America, Citibank, Morgan Stanley, you're sitting there and you're saying, hey team, how is this going to disrupt our business? And they say, well, if they apply the technology, it's possible that, or maybe even probable that, we can have tokenized stocks and different instruments. And so that all of a sudden everyone's gone, oh, well, that's kind of cool. Like, could I tokenize my hedge fund LP? Can you tokenize my credit fund? And we're doing stuff with Apollo.
Of course.
And can we hit new distribution paths? So I'd say the demand is mostly coming from asset managers that want to find new distribution paths. So if you think about like issuers and investors, it's the issuer side who's really actively looking for new investors.
And this is going hand in hand with like the major push into retail investors and kind of high net worth online and what I call like an independent investor. Like that's really what's driving a lot of this is they see tokenization as an avenue where they don't have to go through the stockbrokers or wirehouses. They can kind of go this other angle.
Well, I'm kind of thinking there's multiple paths here. So you can tokenize things and still go through your brokers. And so my theory is water will flow where it flows the easiest. And so tokenizing things, so a couple of things come to mind. So Van Eck did a tokenization of a treasury fund. I think they're kind of ahead of the game. I think Avalanche did something with CLOs, which is at the more complex end of things, and that's kind of interesting. That's worth dwelling on. So, like, why would you tokenize a CLO fund? I mean, CLOs are kind of complicated. I used to be a head of structuring of CLOs, and so I know it particularly well. But that's a good demonstration of something on the more exotic and complex things, rather than a single stock. So that is a good example. The Avalanche CLO of what structures are called like repackaging. So making it available to those people in a form, in a marketing way that wasn't previously available. So it's possible, and I think probable, that some of those tokenized assets may find its way to new buyers. Maybe it's a new demographic of younger people that are already involved in crypto that are like, hey, what's that? It sounds interesting. So I think tokenization is a super broad topic. It can apply to the most complex to the most vanilla. I think it will be transformational for having issuers find new investors, and the list is eclectic. So for us, it's kind of difficult to say like, who is it that we should cater to? I can give you a list of public announcements that are out, but like Apollo, right? And Mark's out there talking about tokenization markets. Larry Fink's talking about tokenization of all things, and those serve as amazing examples. Avalanche has been out there for a long time, talking about using their chain to tokenize assets. So thematically, all this stuff is coming together. It's not exactly clear to me what's going to scale first, but I feel like the issuer community's got a lot of bases covered.
Today's episode is brought to you by DeFi Development Corp. Global wealth today exceeds $500 trillion, yet crypto still represents less than 1% of that total. DeFi Development Corp, NASDAQ ticker DFDV, offers investors a new way to gain exposure to one of the most disruptive technologies of our time, crypto infrastructure. As crypto and TradFi veterans, the DFDV team is building the first select Solana-focused public treasury. They're accumulating SOL to give shareholders direct exposure to what they believe is the definitive crypto infrastructure poised to capture a significant share of the $2.4 trillion in revenue generated from global value transfer each year. DFDV believes Solana is positioned to disrupt the world and aims to provide investors with one of the most levered ways to participate in that upside by tapping into capital markets fundraising, leading the way in on-chain innovation, maximizing yield, and launching similar public vehicles in key international markets. To learn more about why DFDV believes SOL represents a transformative opportunity and why DFDV is the best way to capitalize on it, visit dfdv.com/pomp. That's dfdv.com/pomp. Now, there's also this belief that on-chain and kind of the decentralized infrastructure versus centralized infrastructure. So we talked about like there's different types of assets that people want exposure to or maybe even be the issuer of. But the way that they interface here, right? So they can go and buy something on your centralized exchange. But also now it seems like Coinbase is adding a lot of decentralized, kind of on-chain type activity. Is there demand from the institutions for that type of stuff yet? Or is that kind of like 201, 301 level stuff that they're not yet there?
I think it's 301, level stuff where I think the institutions have to begin to say, it's the first time really that they've had, I would say, not the promise of something, but the threat of something. And it's the threat assessment to say, what can happen to our business? So if you're, I don't know if your audience is any TradFi people out there, but if there are
big TradFi people over here.
Okay. Yeah. So I can say, in boardrooms right now, they're saying, hey, the last great transformation of markets was like electronic trading, right? And that like changed the landscape of all things. That is the sort of, that's the context with which people are saying, this is the next great thing that's going to change the financial landscape. So that threat assessment is driving firms to say, what's going to happen to our equities business if this actually comes to scale? And so it's the threat assessment that's sort of drawing both fixed income, vanilla, complex, all the financial instruments are everyone that's responsible for a product is now being forced to think through how stablecoins as collateral management that goes across all the asset classes are going to change the way they flow. And so I think there's a real risk of people saying, just like they did last time, if you think about, some of my former bosses and managers, by the way, like when I said I was going to go to Coinbase to try this thing and I was really interested, 9 out of 10 of them like begged me not to go. But that,
because you're so good, they didn't want to lose you, or because they thought you were so crazy and maybe not intelligent for going?
It was definitely the former. Yeah, for sure. For sure. But now so just imagine the profile of that person though, who's now, rewind, and it's like the last bull market. And, you've got Coinbase and you've got others, and you had, I'll bring up FTX. I had a former boss that said, Brett, this stuff just won't go away and I'm too old to learn it.
Yep.
And after FTX happened, he felt validated that he ignored it. Now, he's not yet retired. He will be soon, but he's going to do the same thing again now, and he's going to lose. And so it's time for him to retire, move on, and make way, because it's the Kodak moment for financial services, right? If they don't actually embrace the technology now, you will be left behind. And so I spent a lot of time last 5 years saying, hey, this is coming. Now I'm overwhelmed with interest. I spend a lot of time with the people that are dissenters. Right now, I just don't have the capacity to continue the debate. There's enough out there. There's enough evidence. There's enough big names. I can go through them and reference them. But once you see your client base activating, and that's what's happening, the client base is activating and the banks are behind. So when you see BlackRock doing, progressively, not just one thing, it wasn't a passing interest. And, you've got Larry and senior leaders in the firm talking about the tokenization of all things. Like, I think you're really supposed to pay attention, aren't you? Like, would you ignore it?
I keep saying that, when do we call BlackRock a Bitcoin company, right? Or like a crypto company?
Yeah.
And if you come back to this idea of, okay, you got one product, it's the most profitable, got it. But I think that there is going to be a tipping point where likely more than 50% of their revenue is going to come from crypto related products, whether that's tokenized securities, whether it's Bitcoin, ETH, Solana, whatever. Like there will be this like flippening of revenue. And at that point, it is very, I think in a different way, but very similar to what Coinbase is doing, right? Like the BlackRock name or name, Fidelity, Van Eck, whoever, very trusted, very well established in the kind of the traditional world, but they're almost like recreating their business in a crypto. And right now it's, more centralized in kind of the traditional wrappers, but eventually it'll be on chain in, various ways. Apollo's doing some of this, whatever. You guys seem to be the trusted, kind of established brand coming from the crypto native side, but you are kind of ripping out some of the centralized stuff, putting the on-chain stuff in there on the consumer side. I'm assuming over time, as things just generally move on chain, ICE, NASDAQ, these guys are all saying that they're going to put stuff on chain too. Naturally, all businesses are going to kind of flow that way, and having that established brand actually may be more valuable than people realize.
Great and super insightful, Anthony, as always. This is like the moment where I have to
be nice to me because I'm interviewing you, so you can say nice things.
No, it's recognition of what Brian and Max Brandsburg built. I know he was talking to you yesterday, but Max has been on his side. He's been the leading tip of the spear, and it's really his clientele, his clients, his consumers that have gone bravely into DeFi. They've created demand and on-chain. They want on-chain experiences. It's a younger demographic. It's important and for the institutions to watch the on-chain economy begin to form. And the way it's always been in crypto is it's first retail and then institutions. And so this is where it's like super important for my institutional business to be housed within Coinbase. This comes back to your brand point. And what I've seen so far is like the on-chain economy is first starting with retail. But that's led to, the first movers and institutions going, I think we want to tap into that, consumer. And so that's where I see a lot of these early tokenization projects on the institutional side. I don't think are designed to be, IBIT may be the first $1 trillion ETF that has a combination of retail and institutional.
You think it can get there?
I think it can actually.
Yeah, they're at 100 billion now.
They definitely touch that.
Or they're around 100 billion. So 10x from here. How much of that do you think is price appreciation versus like continued inflows? It's hard to
I know I'm preaching the choir on this one, but supply demand and wow on the demand side. So I won't give price forecast, but I think it's possible that maybe 50% of that may be wind up being driven by price. But back to the on-chain economy, one of the things that Brian was saying is the crypto natives really want to see on-chain, and they really have a decentralized preference. But a lot of things on the institutional side need to begin with centralized, and I think part of the success of Base is really because it's housed within Coinbase.
100%.
And we're having, I would say surprisingly, we're having institutions say, actually the first footprint we're going to have in the on-chain economy is with Base. And let's privately, begin to put some things in place. And so that's super exciting.
When you think of these institutions, you mentioned earlier the digital asset treasury companies as another way for the clients to get exposure. I know you guys are doing a bunch of stuff with these companies as well. How are you interacting with them, servicing them? What are you seeing in that market?
Gosh, I think the last time I made a count, and it could be dated now, but I think I counted up 260 digital asset treasuries. And that includes corporates that own some, Bitcoin on balance sheet. But there will probably be a consolidation over time, and still, some debts that will scale. I'd say the role that they're playing is really important because it's another bridge into the crypto economy. So making it easy for people to, buy a stock. And so a couple of things come to mind, there. I mean, the first one that pops into my mind happens to be, Avalanche and AVAX. And I think they have an interesting strategy because they were early on the institutional side with their subnets and sort of different projects that they took on. I think I already mentioned, the CLO one. I think they've got one with the DMV. They've got one Toyota and some other stuff, which is pretty cool. But the DAT, which will own the token, also intends on, I think they call themselves like the Berkshire Hathaway of crypto or something, or that's their ambitious, goal. But there, I think they have something different, which they want to buy ecosystem partners, not just own the token themselves. And by the way, in this moment, I need to disclose that I am actually on the advisory board in a personal capacity, and so my comments here are really in that context. But I've learned that they intend to buy and support ecosystem partners to kickstart activity there.
And is the idea that they want to have operating businesses that have cash flow and stuff like that? Because I think that's the one thing. I mean, we just saw Strategy get their credit rating, and one of the things they got dinged for was the fact that they're not profitable, right? Many of the other companies that have started to enter into this treasury world, they actually are either selling off their like core operating businesses and trying to become much more like pure plays. But it does feel like there's a whole new wave. I know of some that have not yet been gone public, or they're kind of thinking about it. These are, in one case, they're companies that have nothing to do with technology, right? They're like kind of like infrastructure or manufacturing type businesses that are profitable, that you've got, essentially a Bitcoiner or, some sort of crypto fan that runs those businesses. They've been putting stuff on their balance sheet, and now they're saying to themselves, well, maybe I should be a public company. I've got cash flow and I've got the asset. It sounds like this Avalanche one is trying to do something similar, but just like go and acquire it, almost like a roll up.
I don't want to speak too much about that one, but going back, I mean, as you say, those operating companies, I can think of another DAT that has a mining company. I can think of another DAT, like Strategy started with, their software business and then said, we're going to buy a bunch of Bitcoin, but we have, enough operating income to, to sustain leverage and price downdrafts. They've now, grown so large that the operating company looks small in relation to their holdings. That's a new set of problems as a function of their success. But a lot of the DATs are just, hey, let's find an easy path for new money to enter the place to own tokens. And whether some are Bitcoin, some are intent on modeling themselves after what they are betting that one day if there's an SBR. A strategic Bitcoin reserve or sovereign holdings, they'll mirror those holdings. And so there's some pretty advanced strategies that are out there. But the thing I like most about it is I think the last time, if there were 260 companies, I think there was something like 15 billion of new capital that's come into the marketplace. And we welcome that. And if there's like some sort of flow of that capital that gets to support emerging on-chain businesses in the crypto economy, mining and other things, I'm all for it.
Now, what are the areas you see as maybe where you think the institutions are not yet paying attention to, but they should? We talked about on-chain. Are there other areas where you guys are either making bets from a product standpoint, or you're like, man, I'm pretty surprised that we're not seeing demand, in X or Y area?
Well, I just realized I didn't totally answer the question you asked in terms of what Coinbase is doing with the DAT. So let me just finish that off. So what we're doing is what you'd suspect, which is we're providing custody for sure, providing trade execution, financing. A lot of them actually it's a small bunch of people that intend on having some sophisticated treasury management. And so we've got our asset manager, Coinbase Asset Management, CBAM, who has those skills. So if you're doing like call overriding or doing, Bitcoin yield, they just launched the Bitcoin yield product. So CBAM is actually positioning itself as an asset manager to act on behalf of those treasury companies, like outsourced, asset management. Coming back to your the current question in terms of what else we're not seeing. If I go back to the big picture on tokenization and what we're seeing from issuers, what we're seeing is people, stock markets are at all-time highs. People are feeling, I'm not going to make a projection on where we go next with the economy. That's what you do. I
heard 8,000. I didn't know he said 8,000 S&P.
Yeah, million of Bitcoin. So we're seeing those issuers wanting to find, active new ways to find investors, right? Mm-hmm. So I think issuers they're like, how do we keep growing? And for them to keep growing, they need to find new ways to attract capital. And if they've expired all the traditional like distribution paths, which they have, then the next frontier is the on-chain economy. Mm-hmm. So I haven't seen anyone so far say, ooh, look what's happening there. Like we need our operating business to instantly go there. But Anthony, I do remember, when I first joined Coinbase and I was kind of learning and talking about what smart contracts can do. And I had CEOs and CIOs of insurance companies come immediately, which I know for 20 years, saying, all right, we're ready. I had, I don't want to say the names, but some of the world's largest retailers and tech companies, remember all the stuff with Meta and what they wanted to do. And so they came all at once and said, hey, we're ready to do this on-chain thing. Like, how does it work? We weren't ready. We weren't ready at the time to fulfill their needs. I think we're now ready. Mm-hmm. So we're getting there. So I think I want to see myself more of the use cases. I think our consumer business will lead the way. I think we've already seen massive growth of DeFi exchanges, and that continues to grow. Thematically, Brian's talked about Base eventually becoming more decentralized. So there's a lot there, Anthony, to unpack. Let's stop there.
Today's episode is brought to you by EasyBitcoin.app. They offer a simple, rewarding Bitcoin investment experience. With Easy Bitcoin, every recurring buy automatically earns you 1% extra in Bitcoin, and the sats don't stop there. Hold your stack in the app, and you'll collect a 2% annual reward, plus 4.5% APY on any US dollars you park in the USD interest account. You can even opt in to have your interest auto-converted to Bitcoin. It's a simple, set-it-and-forget-it way to grow your Bitcoin. Easy Bitcoin is live right now on iOS and Android. Hit pause, click the link in the description, download the app, and start earning while your Bitcoin stash grows. Your capital is at risk, crypto markets are highly volatile, and this content is informational and not financial advice. DC is now very important. It seems like every other week there's some event going on there. People are flying from all over the country. Genius, I think, is a good first step, and people feel like, okay, we got some, clarity and certainty here. We now know what the rules are. Let's go execute. There's the Clarity Act. There's also a number of other things that people are considering. How are you guys building in a space where you know that the regulation is going to continue to clear up, right? It's always one of these things where I think the reason why Coinbase has such a good brand is, kind of my view of it is you guys have always said, look, we're going to operate with extreme caution. And even at times where I think you guys were operating with caution, you still felt like, hey, we're running into the, regulatory apparatus and there's some maybe irrational views that are coming to us. And we're the good guys, right? We're the guys who are trying to, be pretty cautious here. Now that we're getting that clarity, it does feel like it's a tailwind, but there's still some open questions, like what does clarity look like? What does some of these other legislative pieces? So how do you kind of incorporate the DC activity in what you guys are doing?
Well, I got to say, it is the number one catalyst for my business for sure. Mm-hmm. And so a number of things pop into my head. I love the expression, even if people don't, you can't put the toothpaste back in the tube. Mm-hmm. And that's what just happened.
It's true. You can't do it.
You cannot do it, right? Yeah. It's a mess. And I actually tried that one time in a hotel bathroom, and
it doesn't work.
It's true. Yeah. So
got to check, if you're going to use the words, you got to check it. Make sure.
Yeah, got to check it. So that's happened, right? Mm-hmm. And
don't pick up pennies in front of a steamroller. You got to check it.
Yeah, see, the TradFi expressions are coming out. I like it. So you can't. We're not going backwards, mm-hmm. and that's an important point. And it's stable coins aren't a bipartisan thing. It's not. It doesn't favor Democrats or Republicans. And so now that that's happened, I'm actually kind of relaxed about what happens next, to be honest. Mm-hmm. I mean, there's definitely things that are more advantageous for the current model that we have, but we've built everything in preparation of having variable outcomes. And so what I mean by that is when we built the business, we separately capitalized, we have information barriers, we have everything. So everything that we've built can be tied together, but it also actually has to stand on its own. Mm-hmm. That's the concept. Right. So I didn't build one trading desk that, we've never traded, proprietarily. So, different to pretty much every other shop out there, we don't front run. We can't. We literally cannot do it. Other places still do that and somehow get away with it. But I could name a few, but that wouldn't be nice. So all the things that we built in anticipation of living in a world which is the world that I actually came from, where I've got like a patchwork quilt of regulators. It's uneven, regulatory environment. You have to be compliant in all the places that you operate. It's not the same. You want to have a client experience that extends across multiple geographies. You want to have financing across all those things. You want to have margin, but this country is a little bit more disadvantageous for capital. This one's awesome. This one has netting. And so what happens next, although, DC is going to be a variable outcome, I'm pretty relaxed, meaning we can cope with and adapt to whatever happens. Mm-hmm. The other thing that's happened in the context of DC is the US was lagging the rest of the world for a long time, like years. And so we were pushing internationally. We were thinking about a world where actually innovation had to go abroad, was going abroad. I've got people in, Dubai. We bought a business, Deribit. There's people in Amsterdam and Dubai. And the rest of the world was thinking they had an advantage on the US. In one change of administration, all of a sudden the US is leapfrog rest of world. Now the rest of world is going, holy cow, Brett, like what's happening there? Tell me what's happening with institutions. Is it true that JP Morgan is really doing JP Morgan deposits on Base? Is that really happening? Did that? Yes, yes, it did really happen. And yes, the big banks are finally coming, and that's happening. So DC for me is the single largest catalyst. It's triggered everyone domestically, and actually it's had the ripple effect of it internationally has been super pronounced. And so now rest of the world is like, oh my gosh, are we going to lose our advantage? Are people going to stop building here? I think my answer to them is, I think everyone's really happy in both places, and we continue to build. Coinbase needs to build its brand internationally. I still want to invest, internationally and grow our footprint there. So no change for us, but DC is the single biggest catalyst. I love the fact, Anthony, that you and I are talking about all sorts of things, like really, really big things in DC, tokenizing some of the world's largest markets as an example.
You watch football. Sometimes they're like running for a touchdown and they celebrate a little too early and they drop the ball, and then it's like a fumble and usually a safety, and it's a whole thing. They get mocked on the internet.
Yep.
Are we at a point as an industry where we're close? We're like on the 5-yard line and we could start celebrating because we feel like we're winning? Or are we actually in the end zone and you feel like, the institutions, everyone is embracing this? And the reason I ask that question is I look at it as three things. There's technology, there's adoption, and there's regulation. And the technology, for all intents and purposes, seems to work, both centralized and on-chain. It does feel like every day you're getting new announcements, whether it's the Coinbase City stuff or it's a certain client or whatever, but like the adoption seems to be there. And now regulation, like, you're saying, look, there around the edges, there's some optimizations and, advantageous stuff. But for the most part, like the regulations are putting us in a pretty good spot. So did we get into the end zone, or are we still at risk of like dropping the ball early and turning, a great thing into a fumble?
Okay, so I was a philosophy major.
Okay.
I was a finance major and I was a philosophy major. So I'm going to give you a weird answer. Here's my weird answer. Both those things are true.
I knew it. Yes.
And so what I mean by that is we're in such an advantageous backdrop where for the first time ever in my pretty long career at this point, we have regulators saying, listen, we've opened the door. Show us through action that you can do this thing, and you can do it in the right way. You can make an on-chain economy work. You can make DeFi work, and sensible things will happen. We're also in the end zone because holy cow, Genius Act has happened. That was like the thing that happened quicker than we thought. However, and here's my but, if some version of what happened last time happens again, we're going to ruin it. Mm-hmm. And I feel like as an industry, that, self-regulation and all the things that happen, I've seen bits and pieces of hubris in this market. I've seen still evidence of some pump and dump on illiquid stuff. There are signs of things that I don't like, and I don't think will be good for us. And so I think as an industry, if we to push the limits. We want to make sure that regulation lands in the right place. But if we have a bad actor at scale, and we had a few of those, and that emerges again, and it will, I just hope it's a contained, place. I think what's happened, the big trend has been, bad actors should leave and go find some other asset class, and let's clean this thing up and let's have proper regulation. And the barrier to entry is so high that only the good guys can operate. And I hope that's what happens, but it's not what's going to happen. We'll unfortunately have a few people, and I just hope that we can not have too pronounced an impact.
I do think that there's a world where Bitcoin and cryptocurrencies are now attractive to these large pools of capital because the return has come down. Like when it goes up 500, 700, 900% in a year, and then it ends up dropping 85%, they actually don't like that. Like that's bad. If it can go up 75% a year, and maybe there's 20, 30% drawdowns, but they're pretty kind of fast to recover, that becomes a lot more interesting. And so in a weird way, the returns coming down actually became an attractive thing for a large pool of capital. I also think that returns coming down and regulation and stability and maturation, all these things we're talking about, are disincentives for nefarious bad actors. Like it's like already there's like too many cops in the market, right?
Yep.
You actually like it when there's no rules. And I always tell a story in, I think it was 2016 or 2017, like right when the ICO like boom started. I remember somebody was like, hey, you want to invest in this? And they sent it to me. And it was literally like a 1-page Google Doc.
Cocktail napkin?
And even better. And then it had a contract address. And then it had a spreadsheet, like a Google Sheet. And people were just putting in their name, their contract, their wallet address, and what they were investing. And that was like, that's how they were collecting funds.
Yeah, I know a guy.
And to be honest, at first you're like, well, how much is it going to go up? Right? And then you're like, wait a minute, what am I doing? Like, this is insane. Yeah. Right. And so when that's the world, obviously there's people doing all kinds of crazy stuff. Now, when the announcements and headlines are not, token goes up 20x in a day, it's, BlackRock launches ETF or Coinbase and Citi partner or whatever. In a weird way, the like bad actors are not so interested in that world, right?
I like that. I think it's actually playing out. I mean, if you look at what happened with Bitcoin, was it 2 weeks ago, when we had like a little bit of a flash crash, the fact that we haven't dipped below 100, haven't come close to it, I think is a sign of there being a steadier base of longer term investors. And so a declining volatility with an appreciating asset, you're right, it kind of fits the profile more for institutional capital. We're not there yet. It's not boring. We still have pretty big vol, but I think it
still is up 70% or whatever over the last year. Yeah.
Right. Bitcoin, amazing. But yeah, we still have those. We still have, as you go out the tail, there is still a lot of that illiquidity and pops and some of that stuff. So I do think your thesis is right, where the more this is out the more people invested, the more capital at risk, the more attention, from the regulatory community. Eventually it'll get on bank balance sheets. It'll be financed.
Do you think the banks are going to hold Bitcoin on their balance sheet?
Eventually.
Yeah.
Eventually. I mean, I think the ball capital rules are still going to prevent that from happening, but eventually, yeah, they will. I mean, why not? In the end, if you have an asset, whether physical or financial, that demonstrates the characteristics we just talked about, why wouldn't you think about, lending against it? I mean, the answer now is because it's prohibitive in terms of, bank capital.
Yeah.
But it's
better collateral.
It is better collateral,
right? I told a story one time before. There's a gentleman who, very well respected lawyer, and he was not very much into the crypto Bitcoin stuff, but he'd helped me with a couple of things, and he started reading the letter I write every day. And so back in like 2020, 2021, I wrote a piece and I was like, Bitcoin is pristine collateral. And I walked through the whole thing. It's liquid. The person lending against it holds the asset. You can, all this stuff, right? And he responded back and he was like, basically, this is insane. Please just stop saying this. Like, what are you talking about? Pristine collateral. You sound like a crazy person. And I remember saying to myself, like, this guy's really smart.
Yep.
Very well respected.
Yep.
And he just had in his head, like, pristine collateral equals like treasury type stuff.
Yeah, T-bills,
right?
treasuries. Yep.
And he couldn't yet think through this idea of like maybe something was better. And so there's been a couple times in my journey of crypto, just like, no, every time you hear that, like, that's the opportunity. Because if everyone already saw it, the banks would be there. There would almost be no market to like arbitrage and be early and kind of build a business. So maybe that's like a really bullish thing for Coinbase.
It's massively bullish. I mean, the thing is, like, this little chat is like, if we were talking about 301 stuff, this is like 801 stuff. So understanding the power of GC collateral, I think you and I understand that in the context of is those balance sheets, portfolio risk and accumulation. So like what happened to the UK, the UK, remember, like with the pension funds had to scramble to, raise pounds. And so this is amazing collateral, right? For that, it has all the characteristics that you have, in terms of the pristine collateral. We don't have to go into the details of it. It will get there. And so for those, remember that there's the converted and those that aren't converted. Those that aren't converted have already been given remember the homework assignment that everyone has to do right now. The homework assignment is, how is your business going to get disrupted by crypto? There are war rooms. Like when Trump was elected, there were war rooms. You know the people, I know the people. They were all in them. And their assignment was, come back and tell us. And I think, they were forced to do the homework assignment, even if you don't care about this stuff. And so who runs collateral and treasury for these places? It's the most senior person in the place, right? Like this is the liquidity of the big bank, right? That person at every place had to conclude that this has the potential of actually completely disrupting our business. That is true. And that's why you've seen, some headlines from Swift or this or that, or, money's,
Western Union says stablecoins are not a threat. They're an opportunity.
Yeah. Okay. Well, let's
stocks down 50% in 5 years.
Yeah, let's just take a snapshot of that one. I can add that. I have a little clipboard on my desk of
Paul Krugman. Internet is no more valuable than a fax machine.
Listen, on the point you were making before about the story about the guy, I wonder if I know the same guy. So there's another guy that wrote Bitcoin is whatever, secretly years later, and this is like a tribute to, you said that guy was super smart, right? The smartest people I know that were the biggest dissenters have actually gone long. They've flipped and they've gone long. 100%. And they maybe haven't advertised it. They may not have, written a love letter to Bitcoin, but they've converted. They will. Maybe their children will.
If Bitcoin goes up high.
Yeah, their children will.
My favorite, I should always caveat this. I think Jamie Dimon's incredibly smart, best banker generation, the whole thing, right? But I did find it quite entertaining. At one point, a couple of years ago, he was like, if I catch anyone trading this, I'm going to fire them or whatever. And then 2 or 3 years after that, he then told the story. So he told his story. He's on stage and he's like, so I said that, and then I got a phone call from my daughter, and she's like, hey, Dad, I own some.
You're fired.
And he, I think that's why I really like him, right? Is that he had the intellectual, like, kind of transparency and honesty to be like, all of a sudden he realized, like, wait a minute, there's like a demographic difference.
Maybe there's something here.
Yeah. And so, like, I don't think my daughter's dumb, right? But like, she owns and I do think, and I've said before, almost every great, especially on the macro investor side, I've met a bunch of these folks, and almost every single one of them I met because their son or daughter reached out to me and was like, I'm trying to tell my dad about this. He won't listen. I think he'll listen to you. Can I like set up a Zoom? And I could like go through the list of all these folks. Yeah. And in the beginning, it's like, all right, let me hear, it's just like, they're not interested whatsoever. Yeah. They're doing it basically because their kid made them. And now, like, you see them on TV and you're like, wait a minute, what the hell is going on here? Right. 2 years later, and they're like, all in, right? They're like, oh, I think this, we're going to do this. We're going to tokenize our funds, whatever. And I do think that that's why they're so great, though, is the like intellectual honesty of, okay, I changed my mind and I'm not ashamed of that. I'm going to go and I'm going to embrace it. And then they end up being a Coinbase customer.
I mean, there's no better thing. There's no more rewarding moment for me that when a dissenter turns and becomes a believer, and not just a believer, they become hardcore. They're hardcore, they're prophets.
Yeah.
I don't even do that stuff.
Yeah.
I never do that stuff. And it's amazing.
I consider myself a Brett disciple.
I'm a Pomp disciple. I've been following you for years and years.
All right. Where can we send people to find you on the internet or find more about Coinbase Institutional?
Go to our website. I mean, it's amazing.
I aspire to build a business. That's just, you want to know about my business? Just go to my website.
Go to my website. Yeah. It's
Coinbase.com.
Yeah, it's the best.
All right. Thank you. We'll do it again in the future.
All right. Thank you.